Hey everyone, welcome in to another daily editorial here on the KE Report. Chatting with Jeff Christian. We're going to be more getting an overview on what Jeff sees in terms of the silver and gold markets that have continued to be quite strong. Gold right around 2,800, silver right around $34 after that breakout above that pretty stiff resistance at 32.50 that we saw last week. Even saw some of the platinum group metals move higher. Jeff is the managing partner at the CPM Group. Click the link in the show notes to visit the CPM Group website. Jeff, let's start off with silver. As I said, that breakout above 32.50, holding above that level, even after some volatility after that breakout. Silver stocks have been doing pretty well. What's your thought on the stability of this silver rally that just continues, I think, to impress on the upside?
Well, Corey and Chad, thanks for having me. And I want to apologize to you guys and your audience for my sore throat. I've had a head cold for a couple of weeks. It's interesting. I have a complex view on silver. On the one hand, I think that on a short-term basis, it will, an ultra short-term basis, it stays strong because of the uncertainties related to the U.S. political elections next week. It's not just the president, it's the Senate and the House that are important. And the fact that around the world, people are waiting to see some guidance as to what the U.S. government's going to look like before they take the next step. So I think there's this tremendous waiting period. And in that waiting period, you've seen people move into the dollar, treasuries, gold, and silver. And I think that stays on. That's what happens for the next couple of weeks. Beyond that, we're getting reports of massive resales of silver by retail investors at prices over $32 an ounce. And you've had situations where investors have complained that their coin dealers ran out of cash, and that the coin dealers have stopped buying, some people call junk silver, but it's the medallions, the rounds and the small bars that are not produced by national mints. And so you're seeing signs that beyond the next few weeks, you could see the silver price show some weakness. We don't see it falling back, definitely not below 28, possibly not below 30. On a longer term basis, we're still looking for silver prices to rise and to rise sharply, because we think that beyond the election and the immediate aftershock of the U.S. elections, the state of the world and the state of the U.S. politically and economically and financial stability wise, there's so much uncertainties and there's such high risks right now that we think that you will continue to see investors buying gold and silver. And that is likely to push the silver price significantly higher over the course of next year, possibly into 2026. So we're looking at higher silver prices in the long run, but we're telling our clients, you've got to be aware that with all of this silver reportedly being, resold to coin dealers, there is a possibility that the price does back off between now and January.
Well, Jeff, let's dig in a little bit more to some of the factors that could drive silver higher next year, and maybe after some of the political theater is behind us. We hear all these narratives, as you know, that, hey, Russia is now adding it to their strategic fund, or that solar panel demand for AI centers is going to drive silver. And I think you make the case that you look at the industrial side of it very closely, but it's usually investor demand that really at the periphery drives the prices, especially on the futures market. Is there more Western demand? Are you seeing it not just in the futures, but in the physical side, or is it still mostly coming out of the East?
Well, it's interesting. Yeah, first off, Russia's had silver in its strategic stockpile since the Soviet era, and they were net buyers of silver from Western Europe back in the 80s, I remember vividly. So that's nothing new. What's new is that I guess the Russian government is much more desperate and feeling much more isolated. And they say that's not true, but every sign within the Russian government and Russian society suggests that it is true. So they are stocking up on silver, but they're more importantly, they're stocking up on other metals too. So they're really getting into this siege mentality even more than they usually have maintained it. I don't think that's all that important. I think really what you've been seeing is to some extent Western investors, but also Asian investors and Middle Eastern investors buying more silver. So, if we thought that investors bought 50 million ounces last year of physical silver on a net basis, we're looking at like 70 or 80 million ounces this year and much more next year, based on our view that next year is going to see a hostile economic and political environment. So you're seeing increased investor demand for silver, and that's a big key. Now, fabrication demand is important, but fabrication demand tends not to drive the silver price up. It creates a base. And one of the things that you've seen over the last few years is the rise of silver use in solar panels and silver use in electronics has reduced the amount of newly refined net silver bullion available to investors. And that's helped create upward pressure on silver prices. I would caution, there are a lot of silver promoters out there who have way too high of estimates or projections as to how fast solar power panels are going to grow and how much silver they're going to use. The silver panel industry is running around 50% capacity utilization right now. And there are a lot of panel manufacturers who are actually suffering financially. So we think that you will continue to see more silver used there, but the rate of increase will slow from what it's been the last couple of years. You have inventories of unsold panels built up, so that reduces the need for new silver to build more panels because the panel manufacturers will be living off of selling their inventories. I think there's also a lot of hype that's probably overstating the growth of silver use in electronics, in automotive electronics. And then you have this hype about silver use in military applications, which is much lower than these guys estimate. And you also have hype about the use of silver in EV batteries, which A, may not happen. B, if it does happen, will be years from now. And C, is unlikely to happen because the amount of silver that would be required if you had a broad distribution of silver-bearing electric vehicle batteries, lithium-ion batteries, the amount of silver that would be required for that to be a broadly applied commercialization of that technology would actually dry up silver supply. And so, people say, well, there's going to be all this silver being used in solar panels and electric vehicle batteries and such. No, manufacturers look at their engineering and they say, there's not enough raw materials for us to use that raw material. So that speaks volumes that those types of batteries probably will not be commercialized because the battery manufacturers say it's just not going to be economically profitable for us to use that technology.
Jeff, what about the supply side of silver? We all know that silver comes from a lot of not primary silver mines, but hey, there are some primary silver mines out there. But what's your outlook forecast for silver supply?
We're looking at some increase in silver output over the next year or two from mine production. Some of it is from actually primary silver mines that we have in our database that we're looking for them to either expand or come into production over the next, say, 2 to 5 years. So we think that mine production probably will increase slightly. You also are expecting increased silver as a byproduct from copper and from gold mines over the next couple of years. And then you're also looking at stronger secondary recovery of silver from end-of-life electronics, end-of-life jewelry and decorative objects, and starting to appear now over the last year or two, used silver being recovered from spent end-of-life solar panels. Some of these solar panels now are being recycled and the silver is being recovered.
Jeff, could you also outline, I know we've done this in the past, but I think it'd be worth reiterating, There's so many narratives around the silver deficit. And I know you've done videos on this over at the CPM Group, and we hear it every day in the sector. If you talk to a silver company, if you talk to silver newsletter writers, if you talk to silver investors, they point to years of silver deficit and only getting worse. And you've maintained that there's not nearly as bad of a deficit or not even a deficit. Could you clarify some of the research behind it just for people that are confused on this issue?
Sure. Commodities economics 101 is that you calculate your primary surplus or deficit as total supply from mine production and secondary recovery and any other sources that there might be, less fabrication demand. You do not include investment demand in your supply demand balance, your surplus and deficit. And you do that for a variety of reasons. One is that investment demand is radically different and reacts to the price differently than fabrication demand. But really what you're doing is, as an investor, and you could be a physical silver investor, or you could be a mining company considering investing in silver mining. As an investor, you want to invest in a metal market that has a deficit of newly refined metal coming into the market, less fabrication demand. You want a metal that has a structural shortfall of new supply. You don't want to include investment demand in that calculation because investors have radically different ways of looking at the market. They don't even have to buy. They don't have to be in the silver market. They might, sometimes they buy, sometimes they sell. They don't even have to be there. They have much more money to put into physical silver than do fabricators and other people in the industry. So adding investment demand to your surplus deficit calculations skews it, and it makes it look like there's a deficit because you've added dummy variables, which is a whole nother issue that I'll talk about in a second. You've added silver investment demand to fabrication demand so that you can show a deficit. And I say so that you can show a deficit on purpose, because the origin of adding investment demand in gold and in silver to supply demand data was in the 1990s, and it was inspired by a couple promotional companies, agencies, that said to CPM Group's ersatz competitors, hey, we want more bullish data than CPM Group is publishing, and we will pay you to write reports on gold and silver if you, among other things, include investment demand in your surplus deficits so that you can show a more bullish story. So it was a conscious decision to screw with the way commodity markets are looked at, right? So that's the first thing. The second thing is what I just referred to, which was dummy variables. Investment, it's great because investors will say, well, I think these banks should be required to say how much gold and silver they have. And you say, okay, I'm all for transparency as an analyst. Let's start with this room. How much silver do you have? Well, I'm not going to say, this is very secretive information there. How much silver investors are buying or selling. And it's all our estimates, and everybody else's estimates are largely based on anecdotal information. So you talk to coin dealers around the world, you talk to wholesalers as well as retailers. And for example, as I said earlier, right now, the last several weeks since the price of silver went over $30, the overwhelming thing that you're hearing from these guys is, I can't keep up with the repurchases of silver from investors coming in to sell silver. And several of them have said, as I said, they've stopped buying medallions. They'll buy bullion coins, official coins, and they'll buy recognized bars from recognized refiners, but they don't want to buy the stuff, from unrecognized refiners or medallions and stuff like that. So you have a very opaque investment market, and that does two things. A, it makes it difficult to understand how much silver is really being bought by investors. But the second thing is it opens up the market for anybody to say anything they want. So CPM Group can sit there and say, hey, as I just did, we think that investors are probably buying 70 or 80 million ounces on a net basis this year. Somebody else can come along and say, no, it's 300 million. Investors have never bought 300 million ounces of silver on a net basis in any given year from what we can tell. But our research only started in the late 1960s. So what do we know? Anybody can say anything. So the people who come up with these bullish reports with massive deficits use a dummy variable for investment demand. And they can say whatever they want because it's an unregulated market. And they can say, oh, no, there's this massive deficit. You talk to the coin dealers, they say, there's no deficit. How much silver do you want? You talk to major dealers and they say, how much silver do you want? And I've made the point before, all these guys in 2021 who were saying, oh, there's no silver left in the market. We're saying, hey, how much do you want? I mean, we can get you 1,000-ounce bars. It'll take us 2 days, but you need what? 10 million ounces, 50 million ounces of 1,000-ounce bars. Give us your money, give us 2 days, and you can have it. There's a lot of silver out there, and the bulls don't want to hear it, but that's the reality.
Oh, Jeff, I feel like being in this sector as long as I have, not nearly as long as you, but all we hear about is this shortfall in terms of supply and demand. There's not enough supply out there. Demand is outpacing it. I just never see it correlate to price, at least in the near term. Who knows? Maybe it's a long-term thing, but I get tired of people saying, just wait, it's a broken clock, right twice a day. But one of those aspects that I find sometimes people just get in the weeds because, well, they want to look at data that's either bullish or bearish, depending on their leaning. Tie this quickly into gold, though, because gold, it's up at 2,800. You have to like the chart of gold. It keeps all dips are being bought. It's a stair-stepping pattern higher. Everything seems to be a wind at gold's back right now. What do you think?
I think wind's at gold's back right now, and we have the gold price continuing to rise into the first quarter of next year. So, we're telling our clients, people are calling us up and saying, is this it? Should we be selling our gold and silver that we've been holding all this time? And our answer is no, this is the beginning of it. We think that the economic and political environment is going to get even more risky and more uncertain over the next 4 months, 5 months, and that we'll see higher gold prices and higher silver prices, as well as a higher dollar, by the way, because investors are going to be looking for safe havens during this economic and political storm. And if the world is lucky, things start to sort themselves out by February or March. But if the world's not lucky, the period of heightened uncertainty and risks politically and economically will continue well into 2025. And, given the enormous list of things that are going wrong in the world right now, there's a high probability that you'll see that the bull market in gold and silver will continue. And then you have the other factor, which is that even if economic and political things get better, any number of investors will say, that was bad, and I'm not going to let my guard down. I'm going to retain gold and silver as a significant part of my portfolio and my wealth, simply because a lot of these economic and political issues, even if they get better, they're not going to get resolved. They're going to be there, and they're going to continue to hang over the world and over the heads of investors.
Yeah, boy, it sure seems that way. But again, it just seems like all we're hearing and really all we're seeing is the wind at gold's back here. And hey, gold price is responding. And I think even the stocks are doing pretty well. This is, as I've said, one of the strongest environments I've seen, if not the strongest environment I've seen in well over a decade for the precious metals.
You've got to take it into perspective. We're bullish on gold and silver in what we think are reasonable and realistic ways. But there are these people, as you said earlier, there's guys. I know a guy since the 1960s, he's been saying that the dollar is going to collapse, the treasury is going to collapse, and he's been wrong for 50 years. We've gone through some ringers, but we've always pulled ourselves back out of them. And now he's saying, okay, I was a little premature, 55 years ago, but now it's going to happen.
Exactly. Now it's going to happen, right? Eventually they'll be right. But as I said, right now, man, oh man, this precious metals market is very strong. Jeff Christian, managing partner at the CPM Group. Jeff, it's always a pleasure chatting with you. We'll chat again with you next month. I hope you have a great rest of your week.